Shares in Boeing under renewed pressure. The stock down 15% in the past 12 months. Factory workers rejected a new labour contract. The union says about 2/3 of its members who cast ballots voted against the deal. And this, of course, means aircraft production remains paralysed. We're joined by Peter McNally, Global Head of Analysis at Third Bridge. Thank you very much indeed for coming on.
Good to be here.
Peter, your team, you guys at Third Bridge reckon that there will be a deal eventually. I mean, I guess there has to be.
Yeah, I mean, look, the union members, they lost their health care at the start of the month. And, that's pretty expensive here, in the state. So eventually they'll come back to the table. Washington State is not a right to work state, so no one can cross the picket line, and in this case, but some kind of agreement, will eventually be met, in our estimation. However, once that agreement's met, it's going to take a week or so to get everybody back on the shop floor, and then another 3 to 4 weeks probably to get production and efficiency back up to where it was prior to this strike. Now, productivity had been dipping into it. It's typically happens around these labor stops, but Boeing's still going to have some big challenges ahead once this labor situation gets cleared up.
What is the biggest challenge they face?
Well, we actually think there's two challenges. One is the issue of traveled work, and the other is the supply chain. So traveled work allows the company to fix things as the plane moves down the assembly line. Without traveled work, everything has to stop, and that issue needs to be addressed right away before it can proceed. And this is this drags efficiency down. So, our analysts suggest that each plane is going to cost 10% more without it, but it really hampers deliveries, right? And deliveries turn into revenues, and this is what, all the airlines have been waiting for. So until the FAA green lights Boeing to, move ahead. And they've been there, since earlier this year, since the Alaska Air issue. They're really going to struggle. On the supply chain, this has been ongoing for years. We're in year 6 now of volatile deliveries out of Boeing. It started with the MAX crashes in 2018. Then COVID, and now and then just a more difficult recovery in the supply chain, and a lot of inventory is built up at Boeing. It's going to be a great source of cash when they get it sorted out for the company. But this whole situation has put great strains on suppliers, and there have been a lot of defects that have been coming in into the shop, and that also has slowed things down. So our experts are a little skeptical about some of the production targets that Boeing has laid out, particularly for the second half of 2025. Mm-hmm. It's going to take more into 2026 and 2027 to get back to a rate where they can really start generating free cash flow.
And just on the suppliers, they've been hurt because they couldn't rely on the business from Boeing?
That is, a big part of it. Now, look, there were supply chain challenges this post-pandemic across a lot of industries. That had to get hammered out too. But, before the MAX crashes in 2018, growth was projected for a long, long time. And there had been a steady ramp up. But Boeing started running into problems as those accidents occurred, then COVID, and now the latest supply challenges, and now a complete shutdown in up in Washington. So this has been particularly difficult to deal with, and we're talking about hundreds of companies making thousands of parts. It is one of the world's most complex supply chains, mm-hmm. and it's just frankly been hard. Now that said, Boeing has the right man in place for the job.
Kelly
Ortberg knows the supply chain, right? As he talked about yesterday, his inside out view of Boeing. Unfortunately, for him, he's been thrust into dealing with this labor issue first, but this is going to be, the biggest challenge he is going to face is to get all these suppliers in line with, higher quality, fewer defects in the parts that are being, delivered to Boeing.
The fear apparently is that the company could be downgraded to junk in terms of its credit rating. If that happened, what would be the implications?
Man, it'd be difficult, but the company put a line in the sand yesterday. I think talking about having about 10 billion in cash to maintain that level, which is where they were at about September 30th. It looks like they're going to burn about 4 billion in cash here in the fourth quarter with virtually no deliveries. Look, and that will feed into, they're ready to raise capital, right? They've made the filings, and we can get some debt, and we can get some equity, and they can get that liquidity up. But there will be a hesitancy to place those shares and those bonds or any other forms of capital until this strike gets settled, because then we'll have a clearer line of sight as to when the company can start delivering planes and generating cash.
Now, can you just tell, I hope I have my terminology right, they're supposed to be coming out with a 777X. What is that? But they've delayed the launch of that. What would be different about this 777X?
Well, I mean, look, the next generation of all these planes allow airlines to do two things. One, they get more premium cabins, better designs internally, which has been the big demand for what we've seen in the workhorse 737. The other thing that allows these airlines to do is to run more efficiently, right? Which is a big story. Fuel prices have been volatile. Costs have inflated across all airlines, and there's strong demand for those things. So we've seen several versions of these planes from both plane makers that allow for this trend to premiumization of the cabins as well as more efficient flying. The problem with Boeing is that all of these challenges over the last 6 years in particular, and even prior to this, is it's allowed less R&D, compared to Airbus, let's say, who's been far better at executing on new plane programs, while Boeing has been pretty busy about getting their own house in order.
Yeah, I see the Wall Street Journal quotes the CEO of Lufthansa as saying, talking about the delay of this X model. We need it. I've never seen anything like it in this industry. So there is some frustration among customers, obviously.
Well, the silver lining in all of this is that backlog is incredibly healthy. The world needs more aircraft. And in the meantime, leasing companies have been big winners, right? They have planes that we know that fly, have been maintained, and they're staying in the air longer. Ultimately, those things would like to be phased out by major airlines, Lufthansa, United, Southwest, Ryanair, depending on where you are, and replaced with these newer, more efficient models. And again, back to the premiumization trend that we're seeing, that generate more revenue per flight for all of these airlines.